What is going on, everybody? And thanks for checking into the latest TDR Small Cap Sunday podcast. Happy Sunday evening. I'm your host, sdales. Hope you all have had a great summer. Can you believe this? It's the end of August and things are moving quickly. But let's jump into tonight and the main reason why you're here. 5 new companies that we're going to feature here tonight, including a crypto company, a tech company, a jewelry company that you might find very interesting, big cash position for this company, and finally, everyone's favorite, a cannabis company. So with that, let's welcome in TDR lead analyst Bill McNarland to the TDR Small Cap Sunday podcast. Good to see you. And you're back
you
from
too.
Mexico. I'm back from vacation, but clear heads, clear minds, and a clear direction for tonight. How are things?
Oh, things are fantastic. Had a great weekend. Went motorcycling in the mountains with my nephews, so that was fantastic. And glad to be here as well.
Love the intros. Never ask, have you been driving motorcycles through the mountains in Austria? But anyways, good to see you. And yeah, as I said off the top, we've got a crypto, tech, jewelry company, cannabis companies. So some interesting finds, I think, that I think a lot of reviewers will find this interesting. But all in all, I think you put a lot of time and effort towards finding these latest 5 companies, right?
Yeah, fantastic. Yeah,
Yeah.
looking forward to it.
All right. So before we jump in, as usual, before we get started, all views of the Small Cap Sunday podcast, the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice, and the views on this podcast are solely intended to be informational and are not investment advice. All right, let's begin with our first company tonight. It's called Brilliant Earth Group, which trades on the NASDAQ under the ticker symbol BRLT. Current share price $1.94. Market cap is $192 million. Shares outstanding 13.4 million, and daily trading volume is $100,000. So first up, Bill, they operate in 37 showrooms and plans to expand in cities like Boston and New York City. So tell us more about this company and what they do, because they got a pretty healthy cash position right now.
Yeah, I'm interested in all retail. When I travel, I go into a store and I look at it as a business. This week I was in Target and Macy's in the US, and those stores are dying. But then when sometimes I pick up, I see something interesting like this one. I've been to their store in San Francisco and
Yeah.
it caught my attention because they had something that was really different. They have beautiful stores, but they're looking for people that want transparency on the jewelry that they're purchasing, and would go as far as having something that was lab grown if it's more ethical or meets what their desires are for their jewelry. And so I found this really interesting because, some groups like Macy's, there's
Yeah.
so much competition, they're dying, but this is unique. If you have this mandate in purchasing jewelry, this is a store you'd be interested in going to. And so I said, let's look into this more in depth to find out what it's all about.
How would you best then define their audience profile? A little bit more sophisticated versus like its quality versus quantity?
Definitely, I would say they're passionate people about their views on certain things. So we
Okay.
saw this, for example, there was people that for sure they wanted an electric vehicle because they thought this was much better for the environment. Okay. And these are people that are very passionate, kind of similar to people maybe that are vegan and they want to make sure their food is sourced in a certain way. This is a similar crowd that doesn't mind paying more to match their beliefs. They're not going to Costco to buy a diamond.
Yeah, of course. Isn't that funny how there's diamonds available at Costco?
Yeah, that's where I buy them.
Too funny. That's hilarious. That's nice. Where'd you get that? Aisle 4 to Costco.
It was on rebate.
Yeah, exactly. All right. So how has the stock performed recently?
It's been challenging. So first, we're going to put up a chart that shows for the past year. It's been off 41%
Yeah.
on the year. The second chart we're going to put up is the 5 year one since they did their IPO. So it's not a full 5 years, but it's a 5 year chart. We put it in. They went IPO during September 2021, and so they're off about 87% since their IPO. It
Wow.
rallied up to $19, and now it's down to $2. But the market hasn't had the passion that their consumers have had. So he said, well, let's take a little deeper look at their financials.
So let's look at that. And first up, revenue from last year along with growth percentage. What are we seeing?
Yeah, so the revenue is real. It's $441 million. The growth was a little bit slower over the last 12 months, was just about 0.5%. But over the last 3 years, they've been compounding at 21%, and they're going to open some new stores and such. So I think that growth is likely to return.
Okay, so as I said off the top, healthy cash positions. So what's their gross margin and EBITDA look like? This is
This was something that
interesting.
was interesting. So their gross margin is 59.4%. So I was really taken back. So looking at retail, this is very rare that people are getting this much margin, but their
Mhm.
consumers are willing to pay more for the transparency of their purchase. And so this is a great a niche. Their SG&A, it's a little bit high, it's about 58%, but that's fine. They have the margin to support it. And so they had EBITDA last year of about $10 million. dollars.
So 59% gross margin. I'd be curious to know what the industry average is for something like this. I'm
I
sure it,
know it's a lot lower. Like when we're going to different places to buy, it's very competitive because people don't have niches.
yeah,
Yeah, so the niche is the thing of beauty here in a retail business. And most of these businesses that are dying, when I went into Macy's and I go into a Target, they don't have the margins there because it's commodities that they're selling,
yeah,
right?
of course.
But this is very different because they have the crowd that's interested in it.
Focus in one lane and do it well, right?
Yeah.
Okay, let's look at their current balance sheet. So what is their current cash flow situation and working capital? Because it's
Yeah,
healthy.
this is where it got a little wonky. Their market cap's $192 million, and they have cash of 152 million. So it's almost you're getting this company for the cash in the bank, and they have working capital of 130 million. And their liabilities to assets was reasonable at 62%. And so this was something that's very interesting, where the company has come down enough in price that it's almost trading not much more than the cash they have in the bank.
When was the IPO?
The IPO was in September 2021. It came out at $12, rallied up to 19, and then just came down. But yet their revenue has been growing through that time. It's a way better business today than when it IPO'd. But this is how things work these days in small caps. There's a lot of inefficiencies.
Isn't that a dose of reality as whereas the small cap environment is and has been over this past 3-4 years under the current administration, the small cap industry, like S&P 500 has done incredible, but small caps have been hit so hard for the past 2 to 3 years. And this is a prime example as to what is the disconnection. And I was going to ask that question, but I think you pretty much explained it, right?
It's so interesting. We have a gentleman. He's a portfolio manager that watches the show,
Yeah.
and he wasn't aware of how disconnected small caps were at the time. And I was talking to him last week, and he said, "You know what? I think I'm going to go start a small cap fund because stuff's so cheap."
It's
Yeah,
well, when you hear stories like this, it doesn't add up,
yeah,
but,
yeah.
hopefully that changes with obviously inflation coming down and hopefully interest rates both in the US and Canada continue to, come down as well, but, all right, so one last thing I wanted to ask is levered free cash flow, what did you find?
It's real. $14.3 million. So the
Okay.
cash flow is even better than the EBITDA. So they're doing things right, and they've been improving their cash positions and account payables and account receivables. So this is very supportive of what we've seen above.
Okay, all right, moment of truth, and it sounds like you would own this stock.
It's inexpensive. I like specialty retail if there's a real niche and they can charge high prices. The revenue is growing, and trading for not much more than cash. That's pretty interesting to me for sure.
All right, next up, let's stay out west to head further north to Vancouver, Canada, and a water company called BQE Water. Current share price is $60, market cap 76.6 million. Shares outstanding extremely low at only 1.27 million, daily trading volumes around $70,000. So, what can you tell us about how this stock has performed recently and what makes the overall company unique, Bill?
So we bring up the stock for the last year. This stock is on a tear. It's up 141%.
Okay.
It's caught people's attention. So first of all, this is an environmentally feel good story
Yep.
in the mining industry. So again, it's a service provider to the mines. Um, Mining takes a lot of water. So first of all, countries are very aware of this, and it's very difficult to get a mining permit without a plan for your water.
Okay.
So this company comes with a technology that will clean the water using their new technologies and put it back to its original state and be able to take out anything that shouldn't be in that water. So this is a feel good story for anyone that's looking for an environmentally focused company.
That's interesting. What's the share structure? Like this is like extremely low. So why is it set up like the way it is? Do you have any insight pertaining to that?
No, I don't, but this is how stocks move. You notice that the float is low
Very
and the
low.
amount of daily trading volume. And so when people start to get into this and they see, okay, this company is making progress, This is what can happen to any of the small caps that we talk about in the next year. And we see with this one, it's up 141% because it's starting to catch the attention of some new investors.
How's the stock perform? Like when you said it's ripped, but as far as the spread, the bid and ask, like if you buy something, is it difficult to get out of based on the low?
Well, you're not going to, for an institution, it's going to be a little bit challenging, but $70,000 a day. It's retail focused for sure right now, but there could be some institutions starting to take a look at it, and that could be the reason that there's such a spike.
Okay, move to the charts now. Revenue from last year, along with growth percentage, is showing what?
So we put this at the market cap $76 million. Put in perspective, the revenue is 18 million, which is real, but it was the growth rate that caught my attention. So last year was up 45%, but 3 years was 331%. So what was interesting is the gross margin in water being 51.1%. So
Wow.
this isn't a bottling company that's taking mountain water and selling it to
Yeah.
people and not making a gross margin. This is real when you have a technology and you're treating it, and the mines are dependent on you to be able to do it, to be able to keep their operations going.
What do we report for EBITDA?
So the EBITDA was $2 million. So this is the year, it's small, but this is the year that they went from, we could call it a water tech company. 3 years ago, they had a technology and they were trying to, monetize it and grow it. Now they've really done that. They've turned into a growth company, no longer an earlier stage tech company.
Hmm. Hence the reason why the stock's been performing the way it has. Like if you
Yeah.
give me an example, what was it trading at a year ago to where it is now?
Yeah. So the 52-week low was $24 and it's trading around $65 now.
Bucks, 2xer.
Yeah.
All right. Let's move to the balance sheet. Current cash situation is showing what?
Yeah, they have 8.3 million in cash, 9.9 million in working capital. So they're doing well. Very little debt. Their total liabilities to assets is 21%. So this is a company that is starting to move into being financially strong.
Okay. Moment of truth. Looks like you'd own this stock as well, correct?
Yeah, they've turned into free cash flow, or they got the leverage free cash flow of $1.3 million. It's a good environmental story. I love service providers, and when you think of some mining operations that maybe are high risk or not profitable, the
Yeah.
service provider is the one that is getting paid because they're necessary to keep the mine going. So I like these types of
100%.
stories.
So guaranteed money.
Yeah.
All right. Third company of the evening is an Israeli cannabis company called Intercure, which trades on the NASDAQ under the ticker symbol INC. Current share price $1.96. Market cap 89.8 million. Shares outstanding is 42 million. Daily trading volume is around 87,000. So first up, what does this company actually do in the cannabis space?
So this is medical cannabis. So if we remember, since 2008 is when licenses came out in Israel for medical cannabis.
That's when it was
So
regulated. Yeah.
Israel was an early adopter to medical. So they are integrated seed to sale model. If you go onto their website, they will claim to be the fastest growing cannabis company outside of North America in the world. So I said, well, this is a story that we should take a look at.
When we look at different markets, they're in Israel, obviously, and they're coming to North America, or they're not in North America yet.
They have partnerships with different companies in Canada. I noticed Organigram has a partnership with them and such. And so their focus is mostly on Israel, but they are partnering with different companies to use their technology that they have in the medical space.
Good company to be partnered with, Organigram. Man, what earnings they had this week. That is one of the feel-good stories. And a correction just off the top. It actually trades on the NASDAQ under the ticker symbol INCR, not INC, but INCR. I have to also ask, look, they're in Israel. Has this company been affected at all by the
Yeah.
war that began
So,
last fall?
so this is where I think the company is a little bit misunderstood on their revenue line, which we will get to. Their location, they have a location that is close to the war zone
Okay.
that was damaged
Oh,
partially.
wow. Okay.
And this reduced some of their revenue in the last 12 months. But they have an agreement with the Israeli government that if you're affected because of the war, the Israeli government compensates you for that, for what they missed out.
I would
But
hope
what,
so. I would hope
yeah,
so. Yeah, right.
yeah. So what gets interesting there, let's talk about accounting. When you get a reimbursement like that,
Yeah.
so you lost revenue, but you're getting a reimbursement that maybe matches the revenue you lost, that comes below the line, farther down on accounting. So you're going to show as a company that's reduced revenue, even though your cash flows may be the same. And so after the war started,
Yeah.
the stock got hit really hard. It went down to about 99 cents, and since then has rebounded double off that. But
Interesting.
it's still off its 52-week high, which is closer to $4. So this was interesting. This is part of my research. I realized where I think the company was partially misunderstood by investors.
Okay. Revenue wise, what they report last year along with growth percentage?
Yeah, so their market cap's about $90 million. Their revenue was just under $100 million. So this is real. They had revenue growth last year, which causes confusion, was minus 8.5, but their 3-year CAGR was 76.2. So this was a fast growing cannabis company for sure.
Yeah, no kidding. SG&A and EBITDA showed what?
Yeah, SG&A is very reasonable at 27%. That's lower than we see normally. Now, the gross margin is only 30.5, but this is more normal in the medical field. We're
Okay.
seeing that the margins are a bit less. So they produced an EBITDA last year of $1.9 million, including any timing issues or whatever that they had with that reduction in revenue.
Okay, now let's look at balance sheet. Current cash, like any cannabis company, is always important when it comes to investors. What's the current cash and working capital at right
No
now?
issue here. They got $28 million of cash,
Wow.
$58 million of working capital. So at one
Well,
time when this was trading for a dollar, it was trading for less than its working capital. So this is, and their debt is reasonable at 41% liabilities compared to assets. So they had a credit score of 5.8. So just to go on the credit scores, we only mention them when they're really bad or really good. And the rest are normally just in the middle. But this one's pretty interesting how strong the company is.
so they partner with Canadian LP Organigram. Distribution wise, if it permits, I assume that they're going to be in key states in the US as well.
I can't. I know that. Well, I'll share with you their strategic partners and brands and where they're working with. I'm not sure, but they have Organigram, Charlotte's Web,
Yeah,
Tilray,
perfect.
Cookies. So they have a lot of brands there that they're partnering with in some way. So that'd be interesting to find out more details, especially with Organigram, how they're actually partnering with the company.
So in the event the US announces rescheduling, this could move. Like I think many companies in the space will move. Levered free cash flow, last thing. What did it show?
It was okay. So last year, with the challenge that they had with
Yeah.
their with the war, it was negative $15 million. But over the year before, it was positive 9 million. So this
Okay.
is again where the company gets misunderstood. Is just because of their 1 year financials based on what happened because of the war.
That's guaranteed money though. They're going to get from the government though, right?
Yeah, yeah. So it's very that's they've stated that publicly in their press releases.
Moment of truth. Green check mark time. Would you own this stock?
Yeah, very interesting to have a company like this. And I know also sometimes people may be concerned about the war story, but we see the backing of the Israeli government. And I think this is very interesting how quickly the revenue is growing. And I'm interested in learning more about how are they partnering with groups like Tilray.
Well, we'll have to reach out and ask the people from Organigram and Tilray as to why. But
Yeah.
for any viewers out there that are familiar with the story, feel free to leave some comments below. I'm learning more about this, but if you do know about it, leave some comments below and tell us a little bit about this company. But good find, Bill. All right, 3 down, 2 to go. Fourth company. Let's move now to the crypto space. This is an interesting story. Again, crypto industry based out of Atlanta, Georgia, which again is a hotbed for the industry as it continues more and more. It's a company called Bakkt. BAKKT Holdings trades on the New York Stock Exchange under the ticker symbol B as in Bob, KK, T as in Tom. Current share price $13.32. Market cap is 181 million. Shares outstanding is 6.3 million, and daily trading volume is relatively okay at 4.7 million. When I look at this company, it was founded back in 2018, currently operates similar to a stock exchange. And based off of that, the owner of the New York Stock Exchange currently has a 55% interest in the company, which I found rather interesting. So tell me more as to how this company works.
Well, the stock has been really, really hit. It used to be a $15 billion market
It's
cap,
been slammed.
and now it's technically a micro cap. It's not even a small cap because it's below $200 million. And
15 billion to under 200 million. If that doesn't show you what the crypto space was back a couple years ago, I don't know what does. But that's just the
yeah,
reality of the industry, right?
and there's some irony here because we know as a tech company it actually trades on the NYSE. Okay, so that's unusual. But the owner of the
Has it?
55% of the company, it also owns the New York Stock Exchange. But the irony here is they in the spring they had a 25-to-1 reverse split to be able to stay on the NYSE.
Yeah, we've seen that before. Who are some of
Yeah.
the investors behind this? Are there any notable names that you can think
Well,
of?
the big one was the owner of the exchange, and so that
Okay.
was huge. This was their big play for crypto, and so the idea is that it's basically serving the same purpose as the exchange, and so this is for institutions to be able to get involved in crypto, and we know that this is a big thing. Institutions are getting involved in crypto, so I said, well, this is something to look at. The stock's way off, 95% off. Let's see if this is a great value, or is this a trap like we looked last week, like Beyond Meat.
Yeah. Well, let's go to the charts and find out. And what did we see as far as revenue that was reported last year, along with growth percentage?
So the revenue is $1.6 billion.
Huge.
This is huge, and the market cap's only 181. And the revenue growth is huge. Last 12 months, it was over 2,700%.
But are they profitable? What's the gross margin?
But here it is, the gross margin. Their business hasn't worked yet. It's
Hmm.
minus 4%.
Why?
It's
Just
just it's a business model that
where's
doesn't
the
work yet, similar to like Beyond Meat. They
where's
can't
the
get the margins up
hmm.
in the
where would
trading of it. Yeah.
where would be their biggest costs for something like this?
Well, I can't comment on that. I lost interest pretty quickly when I saw the gross margin.
Well said. I like you being honest. All right.
Yeah.
So
So
let's
yeah,
let's look at this current balance sheet then. What's the current cash and working
they
capital
have
like?
56 million of cash, 50 million of working capital. They have a lot of the liabilities are there, 91.7 percent. So the credit score came in at zero point 0.3, so it's showing distress. But with that amount of working capital and an EBITDA loss of 103 million dollars last year, that tells you this is a year that something's going to have to likely happen unless
Yeah.
they really turn around their gross margins on this.
All right, so this is not on sale. This is a trap, correct?
And this is one you can go through quickly too. If you notice something like that, a stock's been hammered, and very rarely you see this. If a company doesn't have gross margin, there's nothing can change this story quickly.
Well, I think retail investors are understanding that, especially when you look at the opportunity and how much learning that people have had. And I don't want to bring up always the cannabis space, but that's just the reality of how this industry was built is that a lot of revenue is taking place. But as you go from startup to mature, it's like what companies are actually producing profitability. And when you start to learn that, then you start to segue into other industries. And that's the most important thing that you really have to learn. But what I have
Yep,
found is a lot of people that have not followed the stock market, the cannabis industry lures them in, but as they start to spread out and look at other different industries, the most important things you just outline. What is their gross margin? What is the profitability involved in this? It doesn't matter how much revenue is involved. It is all about profitability, right?
100%. And remember, and sometimes we see stuff on sale and it's good. Like remember the Bitcoin ATM company we had last week, the service
Yeah.
provider.
Yeah.
That was very interesting.
Yeah.
Yeah,
Healthy margins. Was it 20% you said last
which
week?
is huge. Yeah, yeah, yeah.
Yep. All right, time for the final stock of the evening. It's a tech company called Bewhere Holdings, located in Toronto, Canada, trades on the TSX Venture under the ticker symbol BEW. Current share price 60 cents, market cap is 53 million. Shares outstanding are 87.15 million and daily trading volume again low 32,000. As mentioned, this is a Canadian company that designs and develops industrial IT solutions. So you want to maybe explain a little bit further on what that means and how it works?
They help large companies keep track of their stuff, and
Okay.
they even had stuff like, for example, with mobile bikes that you rent,
Oh, okay.
or large tractor trailers trying to find. I heard something that sometimes a truck driver looking for a trailer in huge yards, it can take them 4 or 5 hours to find their trailer, so it helps them quickly identify it.
That's wild.
But I was interested in their client list. Like they have companies like AT&T, Bell Canada, Walmart, Home Depot, Ford that are using them. And the
So this
stock
work
is,
that
yeah,
those are great companies.
those are great companies. They're big, but the stock. Let's take a look here. We see what happened, and this can happen to any of these small cap names. This year, it's up 219%. So again, this is because they have a lower float, $32,000 a day in trading in the last 90 days, and people are starting to get interested. And so the stock has really taken off.
So what do you do in a situation like this? Because a lot of retail investors don't want to chase a stock, but what's the upside potential? Like, not as far as the share price, but like business wise, is this seem like a long-term sustainable company?
You know what I'm always looking at with these companies, whether they're cheap or they went up in price, I'm looking at, is this a company that's growing its earnings and has good margins and their cash flows?
Yeah.
Eventually that rights the ship.
Yeah.
But we know with cannabis, I guess there's two lessons here. We've seen with cannabis, the ship can go the wrong way for a long time, but when it turns around, it can be absolutely huge.
Okay. Based off of that, then let's take a look at this IT, or I should say tech company. What are the charts showing as far as revenue and growth percentage over the past year?
Yeah, so this is a more of an up and coming company that a technology company. The revenue last year was 13 million. So compared to a 53 million dollar capital market cap, it's a bit modest. But they've had the growth there, 24% in the last 12 months, 20% compounding over the last 3 years, and healthy margins of 40%.
Very healthy to say the least. EBITDA showed what?
Of $1.1 million, and that's because they've kept their SG&A in check at 24%. And this is a trend that we've noticed. When you're dealing with large companies and you have a service, you don't have to create brands. You just
Yeah.
have to solve a problem. Not like the company like Allbirds we looked at, the shoe company that was trying to become well known. This, you go to big companies, you solve a problem. Your SG&A stays manageable.
Makes sense. All right. Balance sheet, current cash, working capital showing what?
Yeah, they have cash of 4.3 million, working capital of 6.1, very limited use of liabilities, 26% compared to their assets. So their credit score is 9.1. And again, we
Very
only
strong.
mention this when it's really high. We can see there's no issue with their balance sheet here.
Very strong. We haven't brought that up much tonight, but yeah, 9 point. What you said as far as credit score?
9.1. So there's
Okay.
no concerns here.
Okay. Levered free cash flow showed what?
It's 1.1 million. So it's not huge, but they've turned the corner to profitability. So that's something that's quite interesting.
All right. So it looks like we got our fourth green check mark. Moment of truth. Would you own the stock?
Yeah, because one, I'm really interested in the industry. I was shocked to learn how large the industry is, the growth. So the global asset tracking market is $55 billion and it's supposed to grow at 17.1%. But even quicker, the global IoT sensor market that they're involved in has a growth CAGR of 28.6 in the next 5 years. So they're in a fast growing area. I love the industry, good balance sheet. They've turned into a positive cash flow, good margins.
Yeah.
I can see why the stock is up. So it'd be something I'd be interested in following.
All right, that wraps things up. Brilliant Earth Group, NASDAQ, BRLT. That's my favorite here tonight. I cannot believe the cash position and what the valuation of that company's at right now. What was
Yeah.
again? Cash was 132 million, was it?
Yeah, it was just something goofy. I have that
Okay,
number here. 152 million in cash, 130 million
152
working
million.
capital. Yeah.
And I like that story, the cannabis company out of Israel, especially knowing that they're working with both Organigram and Tilray. But again, leave some comments below if you're familiar with the story. I'd like to learn a little bit more about it. But all in all, looks like they partner with some strong companies. Great finds. Again, as I always do every single week, give a thumbs up, a smash, a like for Bill and the amount of information that he dug into this week to give you more information on 5 companies that you may or may not be aware of, but most importantly, why they're grabbing our interest. So let us know what you think of the companies that we outlined, any feedback on some of the companies, as well. If there's any specific companies that you want us to cover, let us know. Leave the comments below. And if you haven't done so already, make sure to subscribe to our YouTube channel. We very much appreciate it. All right, sir. Enjoy the rest of your weekend. Don't forget to
You
subscribe
too.
to our Baked In newsletter as well. This week, we got some big information coming out. So make sure that you subscribe. Got a partnership with a big data company that's about to be announced, that we're going to have some real hardcore data numbers that we're going to share each and every day on our newsletter. So make sure to, as I said, in that lower right-hand corner there, that's the right hand. Wait. I'm pointing the right. Yeah, right there.
Yeah.
That way. Anyways, enjoy the rest of your weekend,
Great.
Bill. Appreciate it.
Take care. Bye bye.
Take care. Bye. Hey everyone, thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel, because in the end, we wouldn't be here without you. Thanks again, everyone.